Hello and welcome to the HI Bull Bear Market Report. My name is Adam Straseske. And here's some important disclosures. Here's our agenda for today. We're going to go over the broad market readings and the operating plan. It was an exciting week in the market, and so let's dive right into it. Got a lot of calls this week about the market going down, and yes, it was down for the week, but are we in bear market territory? The answer is no. S&P 500 and the MSCI All World ex-USA Index are still greatly outpacing Treasuries. Doesn't mean that the indexes couldn't continue down or even Treasuries go up, and so that this would cross over and change the position. But right now it's a risk-on stance as far as the longer monthly term trend of the market. The S&P 500 looks like it started to underperform the MSCI All World just a little bit here. But we have a few more days until the close, and so we'll see what happens, the close of this month. As far as correction risk, yes, we still are in correction risk. And, we're sitting right down here on support. However, if we get a measured move, it's down here below the 2450 level, and the measured move would just be this leg down and then measuring it from the top of this down there. So we'll see if we get that. As far as the breadth goes of it, we're in oversold territory. It doesn't mean that we won't bounce in this range. We are sitting on support, and we don't see any divergences or reversals right now. So correction risk is probably a little bit higher than normal. Not very good for the bulls that the S&P 500 closed on the lows for the week. And so we'll see if we can get a little bit of a bounce here. If we don't get any follow through, that could be a good case for the bulls to the upside. As far as the stage of the S&P 500, we're still in this trading range and really still at the bottom of this channel line drawn from over here. So if we get an inside bar this week, that could be a buy signal, but down 5.95% for the week. Just a bad week for the S&P 500. And all is not lost, but it is bearish that it did close on the lows. And so we'll see if it can hold this channel line, or if in fact we do get a break and a test further down. The 2445 level that I referred to earlier, it's about 5% lower, a little bit lower, a little bit less than 5% lower than where we are today. And here is our operating plan for this week. Still like preferreds, U.S. large caps, U.S. growth, and then of course all of our weekly swings. Large cap and U.S. growth look very similar to the S&P 500. Both of them, again, sitting on support, and we'll see if they can hold in this level. Oil up over 5.5% for the week. We've adjusted our stop up on this. This is by far our strongest one of the strongest indexes that we like here. And, it looks good for oil. We'll see if it can make a new high this week and blow past this top right here. And if it does, in fact, do that, then we'll consider adjusting our stop up. But right now we've got the stop right there. No second purchase range. U.S. Treasuries down 0.43%, basically a flat week for Treasuries, and the only reason we're still in this because the actual vehicle that we trade is still within our trading range, but it is relatively close to getting stopped out. Australia down 2.3% for the week. Bear breakout, broke through the channel line. We've got that's okay. We've got a second purchase range down in here, and I've marked the second leg target right here as well. So we'll consider, if it does go down here and we get a strong buy signal, we will consider buying some. Of course, we'd buy less if it did get down here. We got a strong buy signal, but we'll see what happens on that. And this is I don't want to say it's a probable target, but it wouldn't be shocking at all if we got down to the 2150 level. Brazil down 1.63% for the week, just creeping down, still well within our channel, and we've got a second purchase range down in here. It still looks good for Brazil though. I would like to see a bull bar and then a break above the high, but we're kind of forming this triangle right here, and so we'll see if it can break to the upside. And then finally, the MSCI EAFE Value Index down 2.63% for the week. We've got a second purchase range down in here. Of course, as soon as we got in, and then the darn thing just went down. But that's okay. That's why we manage it, manage risk. And so we've got a second purchase range down in here and a stop price below there. And that's it. Nothing new to add to this week. We've got a lot of bear breakouts, and so if we can get some buy signal next week, then that may change. But right now, nothing new to add this week. And with that, you have a great week, and we'll talk to you next time.